Okay. um, just for starters, and I'll explain why. This is where I closed the remaining two lots I had on, and maybe you can see why. And this starts off with the indicator, or at least the explanation of the indicator of the Traderbuddy entry type indicator. Because as you can see, if we remove all stuff, we entered a higher time frame PD array. We did it here, and I'll run over it what the idea is. I'm not going to go over the markup of the higher time frame PD arrays because that's another topic. So the idea is, as soon as we enter a higher time frame PD array, or a level where we expect price to turn, we're gonna follow price with our indicator. And maybe this is a bad situation I'm doing here now, because this is updated version. I better do it with this version, but I'll first go over the principle. We follow price every time it makes a new low. We shift the date, which is over here, high-low date. We're going to shift to the lowest point if we expect price to turn bullish. And we mark off our switch, our previous swing high, where price first have to take the liquidity before we can enter on a either a pattern, a 1-2 fib entry, or a 1-2-3 fib entry, or a ghost 7-step pattern, which is actually kind of evolving at the moment. So we just wait, we can check later. Now we took the inducement. Okay, that's cool. Here's the inducement. I did mark that off, I believe. Yes, I did. So we took the inducement, which is actually step 5. We will get to that. Now, if we form a bullish order block, I'm gonna enter along. We have Arkadas also. I believe this is Arkadas. Yes. Good afternoon. I was just doing an intro, and we're gonna explain how to work with the entry type indicator. And meanwhile, I'm having a snack and a cup of coffee. So to get back to the entry of I don't even know your real name, TradeQ, but or TradeQuo, what is it? TradeQuo. So let's go to NQ, Ramazan, okay, Ramazan. So first thing we do is, and I can show you the indicator I am working on together with Jan. Jan is a way better programmer than I am. So you can show the two, or at least how much you indicate here. The two PD arrays above and below current price on the 15 minute. And then if we just remove all the other indicators, then you see here what is mitigated and what is not mitigated. This one is mitigated, so this is a POI zone. So the old high here, and that's what you mark off then. You're going to mark off the old high as being unmitigated. And down here we have a mitigated, I don't know, yes, we do have a mitigated zone here. And we have the old low here as being unmitigated old low. And this old low down here is not mitigated. And then we have a 50-minute POI zone that is unmitigated as a third level. So that is a buy zone. Where is it? Buy zone. Okay. This is what we have on the 15-minute. But the beauty of this indicator is once you go to the 5-minute, you have the same zones. So you know that we have a at the moment, I mean, is this live data? Well, it's not live data because I have delayed data, but what time is it? 16:20, and well, it's 10 minutes delayed. But it doesn't matter because what you get is updated 15-minute POI zones on the fly. So at this moment the nearest bearish POI zone is this one. Where is it? Sell zone. And the nearest unmitigated 15-minute POI zone bearish is over here. So that's what we got. So these two, now you can hide so the indicator, so it gets a little bit clearer. And now we go to the indicator which the indices, the quarterly, because we have a strategy formed around the quarterly, which states that at this time 1500 Berlin time, which is the equivalent to I believe 9 AM Eastern Standard Time. So let's go there with the replay button. And now we can see if we put on Jan's indicator. Okay, what are our zones? Well, we have a unmitigated all low here. So that is a potential target. We expand it till 18 or at least to the end of the session. And we have a big mitigated POI zone here. And what we always do is if we have a big zone, well, actually I do it all the time, but we want to have the 50% also. So we extend that one, but this one is already mitigated. So then you can, if it's a big POI zone, you can go to the lower time frame, for instance the 5 minute, and look for refinement of the POI zone, which could be this being a POI zone on the 5 minute. Okay, but that's what we got. Now, what do we do if we trade into a higher time frame? We're going to use our entry indicator. We're going to remove the levels. We know we are in a bearish higher time frame POI, so we expect lower prices. Where can price go to? Let's get rid of this one. Well, this is our first higher time frame PD array, and this is our second, I believe. I have to check. Where is it? POI? No, this is our second POI zone, which is a bullish one, a buy zone. And we also have our 2-day open, which is a magnet for price on the indices. So we have a high expectancy that price could trade to this opening price. So this is 1, this is 2. We have 2 below current price, and we have 1, and here is an unmitigated old high. POI zone on the M15, which is this zone. Let's do it correct. This is actually beyond the scope of what I'm trying to tell you today, but never mind, let's be complete. This is the second one, which is a sell zone above current price. And this is the one we're currently in, which is mitigated. So now we go to the 5 minute or to the 3 minute, whatever you prefer. I already stated I prefer the 3 minute. And we want to have our quarterly strategy on, because at 3 o'clock we start looking for opportunities. In this case, well, since we are rejecting a higher time frame PD array, we're going to look for sell opportunities. How are we going to do this? With our entry type indicator, we follow price at this moment. This is the highest high, but this was, I believe, the news candle. So we're going to ignore the news candle. Is this correct? 1430, yeah. Let's put on news, events, events, news. I want news. I don't have news, latest news, news notifications. Okay, it doesn't work on the ES, I guess. Never mind, this was the news candle. Am I correct, Ramazan? 1430 was the news? Okay, cool. And when the news candle, and it usually does, have these large wicks, we're just gonna ignore the wicks. So this is just actually the price action that's going on. So we're gonna put the high on 1436. So today at 1436, that's our high. And where are we going to put our low? Well, since I said we do not count for this swing, then we need to put our low, our swing low, on this one, because that's the candle. If we ignore these wicks, this will be the swing low. So now these are our settings. Sorry, I have to go to the 1 minute with this indicator, because the indicator is based on the 1 minute. Now we look again, we say, okay, this is our highest swing inside our higher time frame PD array. And where's our swing low? Well, if we do not count this one, then this is our swing low. Now, how does the indicator work? Well, there are several settings. we can look, first of all, we're going to look for a short. You can add the spreads. I don't know, there's not much spread on the indices, I believe. Maybe it'll be like 0.25, I don't know. Something like that. We go short, we have the option. I take it we're all familiar with the 1, 2, 3 FIP setup or the 1, 2 FIP setup, and if you're not, go back to the training because it's all explained. What is not explained is the Go 7 step. I will go over that later. The 1, 2 FIP entry, let's check for that one. What does it mean? Well, this is our swing low. I'll draw it in. We need to trade at least below this level. Shift down. Okay. And once we do, we're gonna mark off the 50% of the swing. That's gonna happen here. So let's see, this is 1500, okay. So what else do we have as a confirmation? Well, we want to look for shorts above, or at least if price is above the quarterly open, we want to look for a short entry. So as long as we are below, we're not interested in looking for an entry. And in confluence with our entry indicator, well, as long as we do not reach this level, and I think you can guess what this area, price area is. It is the 59 to 79. It's a dynamic level. I'll show you, because if we are here, the level is not even plotted because we did not trade below the low there. So let's see. Now, we closed below, so now the level is over here. But if we make a new low, the level shifts. So you don't have to do anything, the indicator does this. And every time it price trades lower, the level is adjusted. So every time now when we retrace, we have the correct level. Well, okay, if we want to trade with the 1, 2 FIP entry, that means if we take out this low, the break line, we go lower, and then a retrace into the 59%, which is this gray line, would be our entry. And this is a tip for you guys, if you don't know. If you take a short position, you want to know your lot size. Use these settings. I'll have to make sure I have the correct one. NQ sell, okay. Over here, that's our entry. Make sure you have these settings. Lot size is 1. Your account size, whatever your account size is. Your risk, whatever you want to risk according to a percentage of your account. And then the entry price you have to put on the 59. And then you put your stop loss at the high. And now you can see here quantity 1.205. You can see how much you can trade. So if you round this off, you can trade 1 lot. I'm not sure if I'm correct, but we'll see. I have one standing here, so let's see if price trades there at all. It did here. And that's why I do manual entries, because you would not have been triggered if you, oh well, we didn't actually. No, okay, then we do not enter. Well, and then we missed, okay. Now we have a second feature. which you always, now, because we go this fast, but in live situations, this candle takes 1 minute to form. So you have plenty of time to also check, okay, what if, oh, sorry, it's the wrong one. What if we put, and this we only do on the 1 minute, what if we look at the candle close? Then we activate this button, and then we're gonna check what the levels are. Now we have to go to the replay again. Oops, sorry. To the situation where it evolved. Okay. And now we see that we exactly trade to this level. And I don't know if we get a more convincing candle. No, we do not. I believe, Ramazan, you said you entered because of 3 consecutive down candles. I don't recall that I gave a training where you can enter on 3 consecutive down candles, but so actually that's none of my strategies. But this 59 retracement entry was a entry. The other entry is the 7 step, or actually the 1, 2, 3 FIP entry. We also have the 1, 2, 3 FIP entry. Let's look at that one. Okay. And now you see, and we have to remove some stuff, otherwise you don't see. I entered after the high of 1430. Okay, so you didn't even enter in a kill zone. Then it was just a lucky shot. Yeah. Well, sometimes you need to have a little bit of luck. Okay, the 7-step pattern. Here we go. Ignore this 59 retracement, 59 to 79 retracement. So if we made a new high, again we ignore the wick of the news candle. If we make a new high inside a higher time frame PD array, this is the first thing that needs to happen. So, because these patterns happen all over the place, but they are only valid if you expect price to go down. Then you're gonna look for the fact that after we made a new high, you're gonna look for a swing low. And I don't care if it's left of the current price or left of the high or to the right of the high. The first swing low, you're gonna mark off. And now I'll really remove drawings, because otherwise it gets way too cloudy. So that would be this one. And now you're going to check, and I know we have not had the training because this is day 2, a valid pullback. The green line here implicates a valid pullback. Just take it from me, the indicator knows best. So this move up is a valid pullback, and I'll mark it up with a green green line because it's a bullish pullback, and it makes this swing low. So after the new high, we're gonna wait for the first swing low to be taken, and then we mark off the first swing low after that. So the second swing low, and I'll go back in time. Oh. So at this moment we have I'll number the steps. This is a shift up, which is step 1. For a bearish 7-step pattern, the first thing that needs to be done is a shift up, creating a new high. Once we've done that, we're gonna watch, okay, where is a swing low formed? That's over here, that's step 2. And if we go down here, then step 3 is we wait for the formation of the first swing low after we take out, and I don't care if it's with the candle close or with a sweep, so only a wick. The second swing low we're gonna mark off as a break line. That's important. We need to know if this line is going to be broken or not. So let's see, and broken by a candle close. It does. Meanwhile, it created a new green line, as you see, meaning we have a new inducement, a valid pullback. And now we just wait for the break by candle close, which happens now. And meanwhile, we made a new valid pullback. So step 3 is confirmed. We broke the second swing low. Now we have to mark off with a break. We know always we were interested in the highest point between where the break was formed and where it was broken. So we want to see this level, that is the major inducement, inducement down. We want to see price go above this level for our step number 4. So this is step number 1. This is step number 2. Once we break, this is step number 3. Step number 4 is the creation or the mark off of this inducement. And now step number 5 is that we take this inducement. So we have to wait for price to get above this level for step 5 to be confirmed. Now let's see what happens. We did, okay. We went above, which means that step 6 is now over here, and that is the creation of an order block. And what is an order block? You will learn that also. Takes out liquidity. Well, we took out the inducement. It's the last up candle, and there should be, for a very high probability, should be a fair value gap. And we should take out the first swing low, and that's what we do over here. So this is a valid bearish order block. Now this is step number 6. And what is step number 7? Step number 7 is if price trades back to the order block, then we're going to enter our trade. Boom. Which is over here. This is your short entry. You take your stop loss and you put it above this level, because usually they take a second inducement. And if you are at least at the wick of the previous swing high, you're probably safe. But to make sure, if they trade above here, then you're wrong. That's that easy. Now you're going to check, okay, where's our target? We have several targets, but the main one was TD, the true day open. Well, that's way more than 3R over here. This 4.5. So this is a valid setup. and we are filled already. And now let's see what price does. It trades exactly to take out the second time, and this is what I was mentioning in the chat, Ramazan, that I feared that we closed above this order block, and if we would have closed above here, then it would have invalidated the 7-step pattern. And this is exactly the reason why I say we put our stop loss over here and not over here on the order block, because then we would have been taken out. You can wait for the trading into this order block, because usually there will form a new order block here and it trades to that one, and it did here. But in a lot of cases they only trade to the breaker here. So just enter on step 7 on the retrace to the order block and you'll do fine. And in the meantime, the indicator is giving you levels, at least if you activate them, your target zones. If you do not want your target zones, you just put this transparency to 100, and then you will see these lines will disappear. I don't know why they are still there, but that's weird. Oh, that is the fill of the two. Sorry, that's incorrect what I'm saying. This is the fill. If you put that to 90, you will see the most obvious level where price is going to, and that is this level here. So to the top of that, is that 3R? Yes, it is. So this is a sensible trade to take, and if I'm not mistaken, price just ran to our profit, and well, that was it. You could have taken, according to our trading plan, you could have taken a little bit off right here. So that would have been at 1R somewhere, I guess. Yeah, a little bit more. And well, then if in this case price just rallied through, because this is the 1 minute, so in 3 minutes or in 4 minutes time after we broke this low, we were all the way down here. So that was an easy trade, and these are the nicest trades. And one thing you should not do is, which I stated or saw in the comments, Ramazan, maybe price is gonna go all the way here. Yeah, maybe it does, but as soon as you make a 4.8 trade, 4.8R trade, you just close the whole damn thing and go do something nice with your family, instead of putting more money on the line. And that should be in your trading plan also. Because I don't know if we risked 500 euros. Oh, I wanted to press the button. Huh? Let's see if these numbers are correct. Where was our entry? Over here. No, entry was on the touch of the order block, which is there. We take a sell, 1 lot. Yeah, it pretty much is okay. Now price is over here, which was 3R then probably. Let's see. No. Why do we have only like 1550? I have no idea. Oh, I do have an idea, because our entry is over here, and our stop loss is over here, which does not amount to. So now the amount would be 1.2. Ah, okay. It's the 1.2, because this is not micros, but these are, I think, standard lots. Help me out, guys, because I'm not very experienced in Minis. Okay, minis. Well, okay, then one mini lot, but you should have been trading micros, then you could have traded 1.2, and then probably you would have had this number here, $2,025 gain, because if I do 1550, let's do that. Just a sec, because I'm not very good in math doing in my head. 1550 times 1.2, what was the lot size? $282 times 1.282. No, something went very wrong here. 1550 times 1.282 equals 1987. Okay, well, somewhere in the neighborhood of $2,000. So that is correct. So these settings for this indicator, for these indices is correct. I believe I had something, sorry, that marked off entries also. I don't know why it doesn't show. Oh, I think it's the new one. Okay guys, sorry, I just checked with the new one if we got a lot size in there. It was 1437. So this was our entry. This was our swing low. Let's get most of this shit out of the way. We were looking for a short. Okay. And we didn't touch it, so we need to do the candle close. Okay. And that's too bad, it didn't touch it. Why not? Let's see, we have show all available trade entries. Well, we did not have a 59 retracement, I believe. Yes, no, we did not. Why did we not have the entry? It should state something over here, but just a second, guys. We don't have an entry yet until here, because you see this dashed line here, that's the 50% retracement from this high to this low. Sorry, the close and this close. Yes, that's the 50%. And price needs to come above the 50% first before the indicator displays a possible short entry at all. So let's proceed. So this one shifts to here. Let's proceed. So this one shifts to this one. Here's our 50%. Okay. So now here we entered our zone, which is very weird because the zone prints something else. I think there's a mix up with this being, yeah, he is taking the low and not the high. Okay. Maybe I did that on purpose. But there should be some information about ticks per point, pip value, number of lots. Okay, and here you give your account and your risk. Reward, this is 9, which is a bit absurd. 3. Spread, if you want to use the spread or not, you use this one. We do our retrace level to the 59. You can fill out anything you want here, but I would suggest keep it on the 59. We were going for a short. The factor is important. If you put down, if we are on the indices, this has to do with calculating the correct lot sizes. And this is the transparency level for the pullback, which are these green lines. There's only one thing I don't understand, and normally there would be a remark here with how many lots you can trade and your first entry. So this is pretty weird why this doesn't work right now. Well, not clear. Well, is this a new version of the indicator? Yeah, this is a new version, Mimbi. I will make this one available also. The weird thing is, let's check if US 100 had a correct entry with the old one. I don't know if, yeah, we have a new high. And we have this break here, yeah. Okay. That high is low. And we probably can do without our candle close. Nope. You see, that's why we have the candle close, or that's why I usually enter on a 7-step pattern. We could have just missed this entry, but if you see it like this close, I don't know how much this is. Let's measure. How do I measure? This one. Okay, you were 3 ticks away from the entry. That would be very unsatisfying. If we just ignore our entry type and go back to the quarterly strategy, we didn't look at that one yet. So let's see if we have something over there. Then we need to go to the 3 minutes. We remove every drawing again. And okay, this is tricky, but I believe somebody asked this question. Oh, it was Jan when he was programming the indicator. For anybody who asks, is this a fair value gap? No, it isn't, but I consider it a fair value gap. I hope you understand what I mean. Because this is an axial gap, bearish. So yeah, it's a volume imbalance. Yeah, yeah, volume imbalance, and the other thing, when we have several fair value gaps after each other, that's called a liquidity void. So, but you don't, you just trade it or treat it. Sorry, you treat it like a fair value gap. So, if price trades back into this, then if you are a very tight stop loss, then you would have been taken out. If you take a little bit less risk, then it would have been going well. The entries on the 5 minute, let's check the entry on the 5 minute. We did not have a fair value gap on the 5 minute. You can even check on the 2 minute, but I don't do that very often because that's very choppy. But you would have had the same stuff as in the 3 minutes, although you could have seen that there is still a gap here, which made you probably put your stop loss above this fair value gap. I don't know if I go too fast and if you guys can see it, but there is a fair value gap here also, which they, oops, wanted to fill before they put price down. This was the last liquidity before they took the whole charade down. So, but according to our simplified strategy, and you would have had a very tight stop loss here, you would have been taken out of this trade. I'm sorry to say that the only thing that would have worked in this setup is what I did, and that is the seven-step pattern. I don't know why. Oh, in the back play you don't see the entries. Here you see my entries. Do I need to draw out the 7-step one more time? We'll go over the 7-step. Okay. So the indicator will help you with, oh, this is the quarterly. I do not need the quarterly. I need the entry types. Okay. I don't want to see the projections. I believe I can hide projections. No, I cannot hide projections. I thought I could. Nope. Well, never mind. I'll make the pullback levels very clear. So, again, we know, this is what I was looking for. And why does it show it now? I have no idea, but okay. This is what the indicator does. When we trade to our set levels with the FIP entry, in this case, I'll first show you this if you guys agree. We have a 0.5% risk on a $100,000 account. So if we take a short position and we enter here and we put our stop loss over here, and this is 4. That's only just 2R. Not very interesting, but never mind. Stop loss in pips 5.37. That's probably not very correct. Yeah, I did made this thing for do we have this at no, 0? Yeah, okay. So it says now you can trade 9 lots and then you have a $500 risk. Let's check if that's correct. Replay. This would have been your entry. One candle further, yes. Okay, now you see it appears here. You can have 9 lots, it says, and then have 500 risk. So we sell here, and let's say if we take out the first swing low, that's our TP1, okay. Yeah, TP one-on-one would be 500, so it's pretty correct, the number of lots. Okay, so here you would have taken either something off when we take out this low, or actually this low, I mean, because the low, the swing low before our entry. Here you take something off, let's say whatever, I don't know, 3, and buy, and then move your stop loss. Oh, I didn't even have the stop loss. Well, just slightly above here, because there is still a fair value gap here, and then it can trade to this breaker. Well, then a little bit higher. So now we have 150, and you can even put it over here, 150. Now we have a break-even trade, or at least a risk-free trade. So and our how come we have this? Oh, because this is very low. Okay, with the indicator, the projection levels. Sorry, I'm switching back and forth, but the entry indicator also has these projection levels. If they are very near, like in this case, you're gonna look for a higher time frame swing, because the way we calculate these levels has to do with what's my high and what is my low I have to trade below. So if I take, for instance, this low, and it's not, let's see, here we break, and this is the inducement. Yeah, okay, so this is actually the inducement, because we broke this one, we broke that high. So if I put my swing on this low, I get other projection levels. And the only thing I do now is get projection levels from a higher time frame. For instance, the 5-minute. So if we look at our entry here, and I believe this was this the news? Yeah, there was that news candle again. Well, you even have to take this one. So now you get other levels for your projections. So now we can take this one, and of course we also have to look for our higher time frame levels, but the indicator gives you projections also. And if you want to show the higher levels, well, you see that this level is in accordance with this old low on the M15, because these are the M15 levels. And now you see how you can use all these indicators, well, not on your chart. Yeah, you use them on your chart, but only to mark off, okay, what's my nearest 15-minute POI? There was this one. And by deleting all this stuff over again by explaining the indicator, we had these levels on the chart, 2 levels above and 2 below. So these were our targets. We can still go for this low because that's the second target we had marked off. Okay, well, now back to what I said. Let's go over the 7-step again. First thing we do, we follow price whenever it makes a new high, like I said, which is over here, ignoring the news factor. Let's get all these info out of the way. Okay, now let's get 1500 because we want to look inside our kill zone and not before. And now we're gonna mark off the 7-step. So I only need this indicator, or at least you guys in the beginning only need this indicator for the valid pullbacks. So, but I'm gonna do it now without. So what you mark off is the highest swing high inside a higher time frame PD array. I'll mark that off here with an illustration. Whoa. Suppose this here, not only suppose, but it was a sell zone on the M15. And we traded into that sell zone. We even, I believe, went slightly above it with a wick. So let's make this a little bit real, something like this. Then we need our kill zone. Let's do that with this one because they print the times. This is 1500, and what we also need is quarterly strategy indices. We need our open here, okay, which is TQ open. And we have our true day open, always on the chart, which is over here. Okay. Our true day open. So that's only what we use. And now we're just going to get rid of everything because we want, well, almost nothing on our chart, only the things that are important. This actually isn't important at all, not for our entry, because we already know like an hour long that we are inside a bearish PD array. We only wait for this zone to start, which is our kill zone in New York AM. And it goes on till 1630, 1630, somewhere over here. 30. Okay, so inside this time window we are going to look, because we expect lower prices, for our 7-step pattern. Okay, step 1, here was a step 1 also, shift up, but as you can see we made a new high, so now we start counting again. So this is step 1. Okay, we make a new high, and now we wait for a swing low, step 2. I'll mark them off. Step 1. Now we wait for the first swing low. I don't care if it is left of this line. I'll make this line a little bit more present. So I don't care if this is the first one or that this is the first one. I just take the first one. And this is contrary to a normal structure, because then only this one counts. But for the 7-step pattern, I don't care. The first one, first swing low, I take. And that is step 2, which is a shift down. Number 2. And now I'm going to mark off the first swing low that happens after we trade below this swing low. That is this swing low. So I'm going to mark this off as being the level, okay, we need to break this one for step 3. Break down, which is step 3. Oh. When we do, and we do here, I'm gonna look for the highest point where we create this swing low and where it got broken. That is this point. And this is what I call the inducement. Inducement down, inducement down, inducement. And actually this is the only thing you need to know. Shift 1, shift 2, shift 3. When shift 3 is broken, you look for the highest point. And that's called your major inducement. Now you wait for price to trade above this inducement. If it closes above, then you have to look up, is there something over here that's not mitigated? In this case, once you learn what real order block is, you know that this order block is mitigated, because this is the order block. But let's not get too ahead of ourselves. This is the inducement that needs to be taken, and preferably with a wick. But it can be with a candle closed. Then you wait for at least after we taken the or mitigated the inducement, then we wait for a bearish order block to form. So sorry, this is step 4. Step 4 and step 3 is actually the forming of the swing low, and step 4 is the break of this swing low, and then the creation of the inducement. I hope this is clear, because the inducement is only there when we break this level. Let's get this one over here. So now we wait till price takes out this inducement for step 5. We do that here, in this case with a sweep, but like I mentioned, it can also be that they trade up, further up, maybe a rejection level here, or some unmitigated zones up here. But now we're going to look for the formation of a bearish order block. And I haven't traded order blocks yet, but for now you can just use a POI zone as being an order block. And this is, this is step 5. As soon as we take out the inducement. Step 5. Whoa. That's too bad. Over there. Step 5. And now we have an order block created, bearish OB, which is step 6. That's the OB. And now step 7 is if we trade back to the order block here, that's our entry. being step 7. And then put your stop loss somewhere over here. And when I saw this happening, no, actually I believe when I already saw this one happening, because we broke here, and I'm doing this wrong, I'm sorry, I'm mistaking. This here is step 4, and here the inducement is taken. So that is step 5. Step 4 and step 5. Five is over here, and this is step 6, which is the order block. That's how easy you mess up. So why? Well, because we broke this level here. So step 3 and step 4 were completed. The inducement was made. Step 5 is the inducement. It was taken. And now we create a bearish order block. As soon as we trade back into the order block, that's our entry. Short position. And this could be a stop loss. But usually this is only advisable if there's some liquidity left over here, like a fair value gap or some very obvious level that price can trade to. In this case, there is not a rejection block, because then we have to hide this one, because this one is already traded this wick. If it's the other way around, if this wick from this candle low was higher than this, then this would have been a rejection block, and then it would be wise to not go in full risk. But this was your entry, if you do everything by the book. And being step 7, as soon as we trade into the order block over here. And if I'm not mistaken, we're going down now. Yes. What else confirmation did we have? Well, we were above the quarterly open. We even created a fair value gap as part of the order block. We had that one here. And this was the moment what I said, now I have to check for your name again, Ramazan, that it almost looked like, okay, well, if we're going to break this, then it's going to be tricky. But we didn't break, we just swept another time the inducement here. And it only is threatening if we close above the inducement. So that was step 7. Step 7 is always the entry. And you always go with the 7th step for a 3R. And if you did everything correctly, well, 9 out of 10 times you get a 3R very soon if it's a valid 7-step pattern. And you always check, is there 3R, well, using the normal settings for or looking for how do I say opposite targets. If there is a 3R, if there is not a 3R, well, then maybe it's not wise to take the trade, or otherwise make it a one-on-one trade, whatever. With the 7th step, it's up to you, but you get the best results if you just trade a 3R. No partials, just because usually if it is a valid 7th step, you will see that usually they trade very fast to your 3R and then get out. I have understood it correctly, the candle must not close over the inducement, it must only be a swing. Yeah, preferably. Another option can be, well, let's use this situation here. Suppose this was the inducement line. I'll remove the stuff. Suppose this, we do not see this. This is the inducement. I hope this is clear enough. So this is the inducement. It closes above, but the next candle immediately takes out the low of the candle that closes above. I consider this a wick. But for instance, if let's take another example. Yeah. Suppose it would be something like this. This is tricky. Let's get rid of that one. So we take out, well, let's take this situation except for the news candle. Here we wicked, and now we traded low, and then we traded above. We consider this a break. So then you have to wait for a new high to create an order block, and you will see that this is the order block now, and then you trade to this order block. I'm not saying that you should trade it like this, but if this was the inducement and this situation played out like this, then this is what you would trade as number 6, would be this order block, and then the retrace to the order block over here would be step 7, and then you go down. So I hope this is clear for everybody. At least I will stop recording, because I've been over an hour at it.